Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. Lots of news flow. Let's jump straight into it. So Russian stocks had gained for the third day, the longest winning streak since trading resumed on March 24th. The reason I bring this up is because what's happening in Russia is also a barometer of what the war sentiment could be in the key region. The foreign minister said that Moscow is preparing a response to Ukraine's proposals on ending hostilities. And in other news, China has made some relaxations as a result of which the US-listed China stocks surged. The report is that China authorities will give US regulators full access to auditing reports, which is why you saw what happened to Didi's, Alibabas, etc. That whole bunch of stocks which did really well in Friday's session in the US. Now, what helped the US markets per se end marginally higher was that jobs report and manufacturing data was strong. You could argue that some numbers were slightly here and there compared to expectations, but it seemed that the US economy has created a healthy 4.31 lakh jobs in the month of March, maybe slightly lower than anticipated, but healthy nevertheless. Unemployment rate fell to about 3.6% from 3.8%. And a lot of people believe that this was a good report, which is indicative of a healthy underlying economy. So this kind of helped the US markets, which ended up about 0.4% higher. Nothing dramatic, by the way, but 0.4% higher. So the US markets did that, 0.4% for the Dow, the S&P and the NASDAQ about 0.3 and 0.2 respectively. Mixed trade in Asia in the early morning trade, KOSPI and ASX were higher. The SGX Nifty indicates a flattish start to the Indian markets. And crude oil is down below $100 a barrel, US crude. Brent is hovering around that $104 per barrel mark. So that is the other small positive for world markets at large. By the way, the only thing that everybody will be watching out for would be what's happening to interest rates and yields from a macro perspective. And yet another yield inversion, frankly, the 2-year US Treasury yield has now exceeded the 30-year Treasury yield as well for the first time since 2007. Remember, last week we were talking about how the 2-year yield has exceeded the 10-year yield, and now it's exceeded the 30-year yield as well. For a lot of people, this means quite a bit. For some people, they said, oh, there's no clear trend on this 2-year versus 30-year inversion. So difficult to gauge the actual impact, but yeah, this is what it is like. What is to be watched today before we come to trade setup or for this week? So keep in mind the minutes of the Federal Reserve's and the European Central Bank's latest policy meetings would be out. And I think people will be keeping a keen eye out for the pace at which the central bankers might, if there is any indication, usually there isn't much, if there is any indication about where the pace at which the rate increases could happen, particularly from the US Fed. And this is the beauty about the month of April for global stocks, because there is a strong US Fed commentary that the April month has to face off with. But April traditionally is a very strong month for the US stocks. The last monthly decline from the month of April in the US last happened in 2012. That's 10 years ago. I don't know if we have this chart that the Bloomberg terminal has, which is called the SCAG chart, which shows the seasonality of the US markets. And that might show you, okay, I think Virat has pulled it up. As you can see, the month of April, this is the US S&P 500. Look at that. The last decline happened 0.75% in the month in 2012. Aside of that, if you see the whole of April, you will see a strong tick of green. And that's quite something really, right? Even in the COVID month, in the COVID year 2020, there's a strong bounce back. So April traditionally a very strong month. Let's see if this one is no different or is it different. So that would be interesting. I don't know if India has the same statistic or no, but I mean, it'll be interesting. Okay, we do have India out here too. And this is what the Sensex has done. So 2021 was a bit of a rough patch, but otherwise you can largely see more ticks of green than red. Well, let's see if it's a traditionally, if it kind of lives up to its billing for India as well. So this is something that we thought we should bring to you. By the way, in terms of key news for India, what might aid is that the GST revenue for February, which was collected in March and reported post-market hours on Friday, was about 1.42 lakh crores. This is an all-time high, really splendid showing on the GST front for India. And these FTAs are a damn good sign, by the way. We've done some with UAE. Now, India and Australia have signed a landmark free trade deal, which will be tremendously beneficial for both countries. But yeah, India is signing these FTAs. UAE has happened, Australia has happened. I think if you hear Piyush Goyal's address, it's there on YouTube. I think you probably believe that UK is due to happen. Something with Japan is due to happen. It's quite a stunning set of deals that India is trying to stitch up across the world, which should help manufacturing and help GDP at some point of time and should help sentiment. That's the key thing. So all in all of this looks positive. Now, what's the trade setup therefore? Trade setup is, I think the moderation of crude prices will aid the market sentiment despite slightly overbought conditions. Even in Friday's session, I said leveraged longs are not a great idea. The markets have rallied 1%, so I was proven wrong. I do still think that we kind of overbought, but this may continue for a while. A lot of people are saying we may even touch much higher levels this week itself, and the moderation of crude prices should certainly help. Autos and banks will lead the uptick, I believe, on the back of strong results. As I mean, the HDFC Bank quarterly update, as well as crude price fall, will aid autos for sure. And from what I hear from people, BSC, PSU, and media are pockets which are seeing some select heavy buying. So we'll watch out for that. What about stocks to watch? So why I said banks? HDFC Bank's quarterly update should give an indication of what will happen to banks per se. Deposits up 16%, whopping 16%, and up 7.8% QOQ. Advances up 28.8%, 8.6% QOQ. I think this is probably the best showing in the last 8 or 12 quarters or something like that. CASA ratio, calculated of course, is at all-time highs of 48%. Really strong showing by HDFC Bank. Cities come out with a note. They're saying they buy target price of 2,000. They're saying it's reported the first quarter loan growth of northwards of 20% since 1Q FY21 and up from 16% YOY reported in 3Q. Sequential growth of 9% QOQ is second highest in the past decade, leading to loans at about 13.7 trillion, 3.5% ahead of estimates, strong 3.5% ahead of estimates. And they also see aggressive branch expansion and retail deposit growth as being very healthy, which is why Citi likes it, Morgan Stanley likes it, everybody likes it. So strong showing by HDFC Bank should rub off on the other banks as well. By the way, Avenue Supermart was also okay, so keep that at the back of your mind. Auto sales, I thought Hero Motor sales fell about 22%, which was in line with estimates. TVS Motors, though, fell slightly more than expected. 2.8% was the expectation. It fell about 4.55%. So TVS might some chink in the armor. But Mahindra & Mahindra, no such casualties. In fact, post market hours, the company and it was reported that the company and Tata Motors are likely to be co-developing in the EV space. Maybe this is a bit of a booster from Mahindra & Mahindra, who knows. By the way, JP Morgan on the sales review for autos said that CVs have outperformed passenger vehicles and two-wheelers, and they believe M&M has outgrown peers across categories. Mahindra & Mahindra and Ashok Leyland remain their top picks. They believe M&M's auto volume growth should offset tractor weakness, while in Ashok Leyland case, it should benefit from the CV cycle recovery and market share uptick in MHCVs. So do watch out for both of these. As per JPM, these are the two stocks to bet on. Anyways, with crude price fall, auto should look okay. By the way, like I mentioned, PSU, defense, media, defense I mentioned on Friday as well. Look at this Citi note on BEL, for example. They are saying a buy with the target price of 253. It remains the top pick as valuation at 17 times FY24 EPS with 21% ROE and 12 to 13% EPS CAGR remains attractive. The provisional update given for FY22 underlines, according to them, structural growth story. The medium-term growth prospects remain healthy with tailwinds from indigenization, exports gaining traction, and ramping up of non-defense businesses as well, which is, I think, Citi's other big plank on which they are saying a buy. So watch out for BEL. This could be the other one. IGL on expected lines has gone ahead and raised gas prices by 5 rupees per SCM in Delhi. They've also raised prices of CNG by 0.8 rupees per kg from April 1st. So a little bit of a pinch for some of the viewers or some of the consumers. And last but not the least, viewers, what stood out for us, and me in particular, was SocGen's comment. I mean, just a global perspective that when we look at what equities could be doing, SocGen is saying Europe this is the all-time high for Europe in terms of discount versus US, and quite amazing if you look at each sector in Europe. So the way people are looking at global equities, some people are preferring Europe over US, some people are preferring the other ASEAN markets over India. All of these might have an impact on how flows behave, and you should try and put this into perspective with how India might look versus the other markets relative to the world. And which is why I've been saying that there's been a bit of a rally. You might want to exercise a bit of caution, not too much, but a bit of caution. But HDFC Bank, crude, Bank Nifty, PSUs all tell you that maybe a bit of a risk on might be in store. Let's wait and watch. Thanks so much for tuning in today. Have a safe, profitable day ahead. And if you're stepping up, stay safe.